So what to expect in 2015 on the vehicle sales front? Well, Gavin Maile is the Africa Automotive Sector Head at advisory firm KPMG. He joins me now. Gavin, good afternoon. Thanks for joining us.
Yeah, good afternoon.
All right, before we talk about the trends in terms of what we can expect this year, let's talk about December. November, we saw a year-on-year figure in sales declining by 2.5%. What's your take on what the December figure will take or will look like?
Devin, that's a very interesting question, and if I knew the answer to that, I think we would already publish it. December is always a difficult month because people generally try and delay purchases of new vehicles, but that's been an ongoing factor year on year. So my view is December will be what I'd call a relatively good month still. Interesting sales during this calendar year. They declined on a year-on-year basis till about the middle of the year. And since then, we've seen some pretty good, strong months. You mentioned November was down on a year before that, but October was very strong. So overall, year to year, we've come back from a negative 5% drop to about, I think it's 1.6% at the end of November. Yeah. My forecast for the year is that we will be short on 2013 sales of 651,000 units, but not drastically short. So I'm expecting somewhere between 640 and 645,000 units for the full year, meaning that December will show a small growth on the previous December.
All right, let's just talk about the behavior of those actually buying vehicles for 2015. We look at just ordinary motorists and consumers. They've been buying a lot of used cars later in the year. And simply put, NAMSA says this is because of vehicle price inflation. The other factor is the disposable income that consumers have in their pockets. How are we starting this year, and how are those factors, how will that determine what we can see in terms of consumer behavior in that market this year?
I think the main reason for the trend of increasing second-hand vehicle sales is the price differential between a new vehicle and a second-hand vehicle has grown. So in the past, we've seen vehicle price inflation being very low. Over the last 2 years, we've seen with the deteriorating exchange rate that vehicle prices have been increasing a lot quicker than the inflation. Used cars, on the other hand, don't track the same trend. Yeah. So we found that used cars now are good value for money, because new vehicle prices have gone up so much. So that differential, which is the prime determinator in somebody buying a used car versus a new car, if you can get a new car for a few percentage more, most people would go for the new car. And I think because of the price increases, you're seeing a bigger trend towards used cars.
All right, our export markets. What's your forecast on what's happening overseas in terms of who's buying our cars?
That's a worrying question again. The real worry is what's happening in Europe. So in Europe, we're seeing quantitative easing being spoken more and more, and in the next couple of days, we'll find out exactly what they're talking. Our biggest export market is Europe. Our second biggest export market is Africa, which is our home ground, and our third is America. So what really will favor America is with the strength of the dollar, it makes our exports into America a lot more effective and a lot more competitive. So the concern then is what happens with the rand versus the euro, because those are is the real concern in terms of, are we out of a recession, or will Europe default or go backwards slightly? My view is I don't think that it will go backwards, but I suppose the good news is our biggest export market being Europe, the rand and the euro are tracking the dollar fairly similarly.
All right, let's talk about what's happening with this oil price phenomenon at the moment. Does it have any bearing on the industry whatsoever?
I think it's got a very big indirect bearing. So if you take the oil price, we've seen the dollar price declining. We've seen the rand depreciating. So you could imagine if the rand hadn't depreciated, what would happen to our local price, rand price? It would have even dropped by more. So to a certain extent, we'd be compensating the deteriorating rand with a drop in the oil. And I think your previous speakers today have indicated that it's dropped below $50. Now that's quite unheard of for many, many years. So we will continue to see a cheaper price at the pump. The drop of 127 today is going to help your consumer. But when I say indirect, so what I see is that the oil price or the petrol price drop will help inflation. So inflation will drop as well. Now, and that, with inflation dropping, will help the Reserve Bank to keep interest rates on hold. In other words, there's no need to increase interest rates in the short term. So we're still at very, very low interest rates, which is where the consumer comes into it. So the consumer needs disposable income. So the more he can save in one area, the more he's got to pay. But I think we've got a really desperate consumer out there at the moment, and it'll be a lagging effect before we see anything come through into the vehicle market.
All right. That's where we're going to have to leave it. Gavin Maile from KPMG, thanks very much indeed for coming.
Absolute pleasure. Thank you.